Hello and welcome to this session in which we will discuss the concept of umbrella insurance. Every time you hear the word insurance, it's a form of risk mitigation, and specifically it's a risk transfer. What is a risk transfer? Risk transfer is when you shift the risk. When you shift the risk of loss to someone else. How do you do it? You buy insurance. So what's umbrella insurance? Umbrella insurance is having insurance for your own insurance. So if you look at this picture here, we have an insurance policy. And above that insurance policy, and we have assets, money, gold, whatever we have here, we have an insurance. So it's insurance above insurance. So it's a way to add an extra layer of financial security, ensuring that you are protected in cases where your standard insurance falls short. So you have insurance, so you have to have insurance, and the umbrella insurance is an insurance on insurance. It sounds, weird, interesting, but that's what it is. But it's important to be aware of its limits and its exclusion. That's what we need to learn about for this session. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Umbrella insurance contracts are a type of liability insurance. They differ from other type of insurance in few key ways. Let's take a look at them. First, umbrella insurance is specifically designed to cover liabilities, not property damage. What does that mean? It means it kicks in when you are it's a liability, legally responsible for injury or damage to someone else's property, not your own. So you hurt someone else, and guess what? Your insurance does not cover enough. For example, you got into an accident and the other party sued you for millions of dollars. Well, guess what? Your insurance doesn't cover that much. So what you do is you have umbrella insurance that covers your insurance. Simply put, to have an umbrella insurance, you typically need to maintain a certain level of liability coverage in your basic insurance policy, like homeowners or auto insurance. So you have to have insurance. Then you will add this insurance as an extra liability. For example, your umbrella policy might require you that your homeowner's insurance include at least $500,000 in liability. Simply put, the umbrella doesn't kick in unless you have a homeowner insurance or an auto insurance that cover up to $5 million or $500,000 or $3 million. Then you will have another policy to cover an additional 5, 7, 8, whatever you want to do. The more coverage you want, the more you have to pay. So how does it work? Well, simply put, if the claim exceeds the limit of your standard insurance, because first, your standard insurance will have to pay. Then, if that's not the case, if it doesn't satisfy your standard insurance, your umbrella insurance will kick in. It acts as an additional layer of protection, covering costs beyond what your regular insurance can handle. Now, bear in mind, there are certain coverage that are excluded, and you have to be aware of those. One is personal. Your own injuries or damages to your own property are not covered. So they don't cover stuff that you did to damage your property. Remember, it's a liability, your liability to others. Well, criminal, any intentional or criminal act causing injury or damage aren't covered. So if you committed a criminal act, your umbrella insurance does not cover you. Also business-related, damages or liabilities arising from business activities, for example, breach of contract, professional services, or worker compensation, you need special insurance, business insurance coverage for that. Let's take a look at a multiple choice questions from FarhatLectures.com. Umbrella insurance is primarily designed to do what? To provide what? Is it coverage for policyholders' personal property damage? Is it additional liability coverage beyond the standard policy limit? Is it the primary coverage for business-related liabilities, or is it for coverage for intentional acts causing damage or injury? Well, let's eliminate the easy choices. Umbrella insurance deals with liability, not property damage, so A is out. Umbrella insurance don't deal with your business-related liabilities. You need business coverage. That's out. Now, does it include coverage for intentional act? I don't think it's hard to find that coverage, but if you do, it's going to be very costly. So if you do, coverage for intentional act causing injury or damage, I don't think anyone will cover you for that. Basically, you commit an intentional act and they will cover you. By process of elimination, if you understand that it's not for damage, it's not for liabilities, umbrella coverage is additional liability coverage beyond the standard policy limit. Because when you have an auto policy or a homeowner's policy, you're going to have liability coverage. Well, if you need more coverage, get an umbrella coverage. What should you do now? You want to go to farhatlectures.com, look at additional MCQs. That's going to help you do what? Understand this concept better, help you prepare for the CPA exam, enrolled agent, whatever course you are taking. Invest in yourself. Good luck. Study hard and, of course, stay safe.